Happy Tuesday, everybody. I hope you had a great long weekend. Yes, it is not the normal day. It is Tuesday, not Monday, and I am not in the normal location. After over 10 years, I finally made it back to Israel to join my family. This is a family trip 10 years in the making, almost derailed by COVID, but we made it, and here we are. So today is January 18th, 2022, and this is your Tuesday market update from Jerusalem. So last week was another page in the historic market action. Since we're one day short because of the Martin Luther King Jr. Day holiday, let's jump right in, wrap up last week's action, and set the stage for what we'll be watching this week. Last Monday, the equity market started out lower as Treasury yields kept climbing to new recent highs. Hawkish Fed speak about pending March rates. Add in JP Morgan, Goldman Sachs, both calling for 4 rate hikes in 2022. Jamie Dimon of JP Morgan actually said there could be as many as 6. In a market that just a few months ago heard from not just the Fed speakers that were sent out by the FOMC, but the Fed chair himself, who told us that we probably won't see the taper be done until March, and we'll probably see rate hikes pretty much further down the line than that. Well, the market has had to come to terms with new narrative, faster taper and rate hikes earlier than expected. So many, and maybe many more rate hikes than expected. So we saw more selling in stocks. They seemingly found a bottom around 11 a.m. Monday. Dip buyers came in, pushed stocks back up, pushed Treasury yields down. They did close slightly down for the day, a win for the bulls. The S&P 500 was down less than 0.25% on the day. The NASDAQ was down over 2% at one point and actually closed with a slight gain on the day. The Fed would stay in the limelight as we still had Powell and Brainerd confirmation hearings later in the week. So Tuesday was not to let anyone down. Powell was at it again. Remember last week I mentioned that it's going to depend on what his tone was. Well, he came into confirmation hearings and his tone was a little bit softer than we had read in the minutes. So what he said was talked about that sort, and the market took that, and it took the market reversal from Monday and kept going with it. Tuesday was a risk on day. The S&P 500 finished with a gain of almost 1%. Fed speak on the day was full. In addition to Powell and his confirmation hearings, I'll add to more of that in a moment. We still had speakers from the Fed governors, Mester from Cleveland, Bostic from Atlanta, George from Kansas City, all held the hawkish line. While the chair was telling the confirmation hearing that the balance sheet runoff, remember that's a surprise that we got 2 weeks ago, that may not come until later in the year. Again, more on that in just a second. That was enough for the bulls to keep the momentum on their side, take stocks higher, rates lower. COVID news out of New York that we may be seeing a plateau in COVID cases also helped things as well. The NASDAQ was up 1.4% on the day. The Dow was the underperformer, just up 0.5%. Just a quick recap of what Powell said and what it meant to the market short and long term. So remember what we were watching for, 2 main issues from Powell. One was about balance sheet reduction, and he was certainly less intense than the minutes in the weeks before. So Powell said that the balance sheet reduction will be appropriate, quote, at some point, perhaps later in the year, end quote. That was much softer than we had heard and much softer than we had read. The other main issue was inflation, and while his comments were clear that the Fed is going to attack inflation, he also mentioned that that the Fed still believes that inflation is caused by supply chain problems. Now, if that's the case, it may mean that the Fed's not going to be as aggressive as we may think. So remember, slowing down the economy will not make the supply chain better. So we'll just have to see how that part plays out. What it might mean for the markets. If this holds, the market seems to be pricing in 4 rate hikes and a late year runoff to the balance sheet. So as I mentioned last week, if the markets are surprised by more than that, we'd better watch out. 5 or more rate hikes, possible. Earlier balance sheet reduction, possible. These are not priced into the market at this point. So CPI print, the big news on Wednesday, and it came in pretty well in line, better than most people feared. The market kept on pace, and the S&P 500 closed up about 0.25%. Yes, inflation is reporting at 40-year highs, but in the first 2 weeks of 22, the market has priced this in. What else should we take from this? I will talk more about that throughout the coming weeks, but here, suffice it to say, what we do know about 2022 is, at least the beginning of 2022, is that the interest rates are going to go up, and that will provide wind in the face, no longer in the backs, of high growth, low earning companies. There will be a place for those in your portfolios, but they will face this headwind. Many of them have already priced this in. So we'll be talking about this. Is your portfolio set up in 2022 the exact same way it was set up in 2021? Are you expecting the same playbook this year? So we're going to continue to evaluate these questions. It's time to focus back on the earnings starting on Friday last week, and not just the simple numbers. It's time to listen carefully to what the management is saying. What does 2022 hold for margin and demand? Thursday came along, brought some additional action. The initial reaction to the PPI and jobless numbers took the market higher again, but that was short-lived. Brainerd's testimony at her hearings was much more of the same. Higher rates by March and several hikes ahead. Added some Fed speak by Clarita and Evans, helped the market to roll over, and the S&P 500 end the day nearly down 1.5%. NASDAQ got hammered again, down 2.5%, and the Dow was down about 0.5%. Friday morning was the time to start to get and digest earnings. As usual, the banks lead off. JP Morgan, Wells Fargo, Citi all reported mixed reviews. Retail sales came out, negative growth for the month of December. But again, who's surprised by this? We all knew that everyone was pushing their purchases forward. Why? Let's say it all. Supply chain issues. So this should not have been a surprise. The market closed out the week mixed, with the Dow down slightly, S&P 500 and NASDAQ slightly positive on the day. All three indices were down for the week. Okay, sorry for the length. So the good news is the upcoming 4-day week is not packed with anything but lots of earnings. As I mentioned before, this is the next big action. Will it be able to take the spotlight away from the Fed? For the bull's sake, we hope so. So we continue with the big banks. Goldman Sachs, Bank of America will also see from Netflix this week. So this week's going to be a pretty quiet on the economic front, but we will still focus on the rest. It seems that the Build Back Better is dead on arrival. We'll be watching economic reports for more inflation news, the earnings, as I just mentioned, and I'm sure there'll be a surprise or two left in there. Monday, we also saw yesterday GDP data out of China, and though the fourth quarter dropped from the third quarter, they did print an 8.1% growth in 2021. Now that is the best growth that they've seen since 2011. That beat the World Bank expectation and beat the 6% growth rate that the Chinese government was estimating. So as we move into this week, the Wall Street Journal reported some interesting facts. 220 large cap companies, that's companies $10 billion and more in market capitalization, are down more than 20% off their highs. The NASDAQ is worse. Almost 40% of those in the index are down 50% or more from their highs. This will have us continue to ask some important questions. How fast does the news price into the markets? And will the Fed shift the way that it does this based on what the market is pricing? Or is the market handling a lot of this for them? Remember, this is an inflation thing, not just a market appreciation thing. As always, please call or email with any questions. I'm here in Israel for about 2 weeks, but I will be keeping you in the loop as to what's going on, and we'll keep an eye on what's happening in 2022. So stay in touch. Come back on Friday for a market planning video. Have a great week.